Today is the 4th of July 2022. Happy Independence Day if you are in the United States. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500 and some ES futures prices, because that market and many other markets, including Bitcoin and the Nasdaq and other stock markets around the world, are at a critical point where we are going to discover exactly what is happening in the markets. So let's take a look. I'm focusing on the S&P 500 or the SPX because the analysis is clear in this instrument, and it's also an analysis that we've been tracking for many months. It's been the most consistent instrument that I've been looking at. So it is a consistent story, if you like. And this is the analysis we've been looking at, of course, with the very important trough in March of 2020, probably 54-month cycle trough that formed then, possibly a 9-year cycle trough. You will know from recent market updates, particularly those involving the Nasdaq, that there is the possibility that that might only have been an 18-month cycle trough. But in terms of the S&P 500 analysis, we've been considering that as a trough of 54 months at least. And the 18-month cycle trough that formed in the beginning of October is there, of course. And since then, we have seen a fairly bearish M shape develop. That is the M shape created by a cycle, probably the 40-week cycle, and it is of course a fairly bearish M shape, and that is what we have been discussing in previous market updates. So let's take a look at the detail of what has been happening. It has been about 2 weeks, I think, perhaps even 3 weeks since I recorded an update with the S&P 500, so we've got a little bit to catch up on. Let's first of all zoom in on this analysis. The first thing to point out is the number of days that have elapsed since the probable 18-month cycle trough over here at the beginning of October. You can see there have been 276 days as of today. And the average length of a 40-week cycle, you should know, is 272 days. And so the time is ripe for a 40-week cycle trough to form in the market. And if you take a look at this analysis, you can see that we have a nest of lows for the 40-week cycle trough right over here below the recent trough that formed in the middle of June. Now, in my previous market update that I recorded about the S&P 500, I was discussing this trough over here as being a trough of either 80-day magnitude or 40-week magnitude. And we're going to take a look at both of those possibilities. This analysis, as a matter of interest, is the analysis that I was showing that had the 40-week cycle trough over there in the middle of May. So let's just clear all of that, and let's discuss how and why the analysis has shifted. It's important to realize that a Hurst Cycles analysis is a fairly dynamic process. As you get new data, you are constantly updating the analysis. And so what is interesting about this is that the 40-week cycle trough has shifted from this position in the middle of May to a circle and whiskers. In other words, it hasn't been confirmed yet, which is very much under this trough here in the middle of June. If you go back and take a look at that previous market update, and there will be a link to it in the description below this video, it was the market update for the 13th of June. You will see that I do discuss the fact that the 40-week cycle trough might still lie ahead, although it could have occurred in the middle of May. So what is actually happening here? Well, there are still a few possibilities. Interestingly, however, we have reached a point where we are going to very soon be able to distinguish which of these possibilities is actually playing out. So let's discuss each of the possibilities at the moment. This is the first one, which, as you can see, has a circle for the 40-week cycle trough. Now, the circle represents the expected time for the next trough of a particular cycle to form. You can see what we call whiskers to each side of the circle, which are these horizontal lines, which represent the range of time in which that cycle trough could reasonably be expected. And so you can see the trough in May was just within the reasonable expected time with that whisker over there for the 40-week cycle trough, and so it is and was possible that the 40-week cycle trough had formed there. However, it seems much more likely that the 40-week cycle trough has formed over here. And so this is the analysis that we are seeing on this chart, that because we have a 40-week cycle circle below a very viable trough, a low point in price, that makes it very probable that that is the trough of the 40-week cycle. Many people ask me, why is Sentient Trader not already positioning diamonds below that trough, because clearly price has bounced up above it. I often say that diamonds are not a trader's best friend. These circles and whiskers, or nests of lows, are your best friend because they provide you with a period of time in which you can anticipate a trough to form. Do not wait for the diamonds to be plotted below the possible trough when it forms in price, but pay attention to these circles and whiskers. So this is the first possibility, that a 40-week cycle trough has formed here in the middle of June. Why has Sentient Trader, and let's just zoom in for a moment and discuss this rather important detail, why has Sentient Trader positioned a 20-day cycle trough below that low point? As you can see, there's the 20-day cycle trough. The reason for that is because it hasn't been able to clearly identify a good trough for the 20-day cycle. If we measure the number of bars that elapsed from this 40-day cycle, according to this analysis, you can see that the average length of a 20-day cycle at 17 days was over here, way back in the first week of June. But Sentient Trader hasn't positioned the 20-day cycle trough there because it doesn't really have enough evidence, hard evidence, in terms of price crossing above an FLD or a VTL in order to position that 20-day cycle trough there. But what happens is that because we have this nest of lows, and particularly this circle over here for the 40-week cycle trough, very soon Sentient Trader is going to start questioning that, and it will position the 40-week cycle trough it will probably position that 40-week cycle trough over here in the middle of June. So what is the critical moment that I'm speaking about? Well, we track the interaction between price and the FLD, and here is the 20-day FLD, which is my favorite FLD to discuss in these market update videos because of the sort of time period that it provides us with in terms of recording a weekly market update. The 20-day FLD is a very suitable FLD to watch. As mentioned in other market update videos, you can track the interaction between price and the FLD for each and every cycle in our nominal model, but we aren't going to delve into that just now. Here is the interaction with the 20-day FLD. And why is this a critical point? Well, if this was a trough of the 40-week cycle that formed over here, you will know that our first interaction is then labeled an A category interaction. We generate a target to the upside, which was not quite met, as you can see over there, which is not as bullish as we might expect, so it does raise a question mark over there. It's a smallish question mark, but here's the important point. As I've mentioned many times before, I will often miss that A category interaction because although we are anticipating a big cycle trough, that might have only been a trough of the 40-day cycle. We're going to take a look at that analysis in a moment, in which case we might not have jumped into a long trade with as much enthusiasm as we would have if it was a trough of the 40-week cycle. But this is the point at which we can begin to get enthusiastic about a potential long trade. I've mentioned this before. The B and C category interactions that occur after a fairly important trough has formed in the market are our better opportunity for getting into a long trade. This is how this works. We believe this might have been a trough of the 40-week cycle that formed over here in the middle of June. Here was our A category interaction, and I do know some fairly aggressive traders that jumped into that A category interaction and took out a small profit over here as that almost achieved its target. But the B category interaction is what we expect when the first 20-day cycle trough forms in the market following the big trough that we are hoping has formed prior to that. We expect price to find support at the level of the FLD at the time that the 20-day cycle trough has formed. What I'm going to do now is actually switch to a different chart. I've already mentioned that we shouldn't focus too much on the diamonds, but some analysts I know like to see those diamonds on their charts, and you can in fact influence the analysis in Sentient Trader to show those diamonds. So let's do that. Here is an analysis where I have pinned the 40-week cycle trough below the low price in the middle of June, so that we now have a stack of diamonds beneath that trough. Let's zoom in and take a look. So here we go. We have the 40-week cycle trough over here. This is our A category interaction, which again almost achieved its target. It was a very close thing. And at about the time that the 20-day cycle trough forms in the market, there's our nest of lows for the 20-day cycle trough. We expect price to find support at the level of the 20-day FLD. Why is this a critical moment? Because, of course, today is a holiday in the United States, and so today's sort of pre-market trading is shown on the chart over here, but there isn't going to be much trading today. But we have a very important moment, and if this was the A category interaction over here where price crossed above the FLD following the potential 40-week cycle trough, then this here would be the B category interaction where price comes down and finds support as it did at the end of last week at about the time that the 20-day cycle trough is expected to form in the market, which means that our next interaction would be the C category interaction. That would give us a good opportunity for a long trade. Now we could enter into that long trade either when price breaks above previous highs, or we could use a VTL. We will take a look at a possible VTL entry in one of the other analyses. The important point about this particular trading opportunity is that if price fails to find support at the level of the FLD and drops down below last week's low level, then this is going to bring into question the fact that the 40-week cycle trough has indeed formed, which is of course what happened when we were considering this trough over here as a trough of the 40-week cycle. Let's take a look at one of the other analysis possibilities. This is the analysis possibility that had the 80-day cycle trough in the middle of May. This is the longer term picture, and as you can see there isn't really any difference in the longer term picture, but if we zoom in you can see the difference here with a different placement of the 20-week cycle trough, and here is the 80-day cycle trough that we were discussing in the previous market update about the S&P 500, an 80-day cycle trough here in the middle of May. The interesting thing about this analysis is that we have our staggered nest of lows for the 40-week cycle trough over there. You can see that circle for the 40-week cycle, and that circle hovering over the 40-day cycle trough that has been found in the middle of June is certainly something that raises a few questions, but you can see that the 40-week cycle is still expected to occur ahead of us. So let's take a look at this in a little more detail. I spoke through this sequence of interactions with the 20-day FLD in the previous video. Here is the 80-day cycle trough, and so here is our A category interaction as price crosses up above it. The B and C, as I mentioned in the previous video, I think are pretty much hidden in that period of price action over there. This was the D category interaction where price crosses down below the FLD on its way down to the 40-day cycle trough. You must remember that these interactions are labeled according to the analysis at the foot of your chart. So it's not simply a matter of labeling each and every time price gets near to the FLD. You have to label the interactions in consideration of the analysis that you're seeing at the foot of the chart. That was a D category interaction. And following that we get our E category interaction, which as you can see is this interaction over here, again almost achieving its target. That's the E category interaction. And so here is the big difference, and this is why this is a critical moment. What do we expect after the E category interaction? We expect an F category interaction. In other words, we are expecting price to cross down below the FLD on its way down into the 40-week cycle trough. Here is the nest of lows. So that is why I say this is a critical moment. On the one hand, there seems to be fairly good evidence that a 40-week cycle trough has formed very close to this circle and fairly close to the average length of a 40-week cycle. On the other hand, if this analysis is the correct one and we still have another 20 days to go until the 40-week cycle trough will form in the market, then we will expect price to move down. How could we trade this moment? Well, as I've already pointed out, there is certainly the possibility that a 40-week cycle trough has formed. If price finds support over here, we have the opportunity for a long trade. As mentioned, you could use a VTL. Here is a VTL on this chart. There is the 40-day VTL. If price crosses above the 40-day VTL, that would give us confirmation that an 80-day cycle trough is formed in the market. And if the 80-day cycle trough is formed in the market, then it seems very likely that this circle for the 40-week cycle has been fairly prescient, and it has in fact indicated that a 40-week cycle trough has formed. That would give us an interesting place to go long to benefit from a move out of the possible 40-week cycle trough. Stops could be placed at the low of last week, because if price fell below those lows, then of course price has failed to find support at the level of the 20-day FLD. On the other hand, if this analysis turns out to be true, then we would expect price to cross down below the 20-day FLD on its way down into the 40-week cycle trough. A potential entry point for that short trade could be at the level of last week's lows. Or you could use this 20-day VTL, which would give us evidence, if price crosses below it, that a 40-day cycle peak has formed in the market. And that, of course, would be this peak over here. That would be the 40-day cycle peak, and we would be in for a move down into the 40-week cycle trough, occurring a little later, sometime in July. I usually display one FLD at a time when I record these market update videos to keep them fairly clean and as straightforward as possible, but it is often very interesting to ask ourselves why price stopped at levels where price did stop. And the answer to that question, in this case, comes in the form of another FLD, the FLD for the 80-day cycle. Here you can see that price in fact found resistance at the level of the 80-day cycle. You can see that price found resistance earlier at the level of the 80-day cycle over here. Let's zoom out quickly and consider this sequence of interactions. Here is the sequence of interactions between price and the 80-day FLD. Following this trough, which I think was a trough of 18-month magnitude, we had our A category interaction over there. Price came up and it did in fact achieve its target as a result of that A category interaction. At the time that the first 80-day cycle trough formed, price was expected to find support at the level of the 80-day FLD, which it did. It then dropped below it and then above it in a couple of interactions that didn't really fit into our sequence of labeling. That does sometimes happen, particularly when you're looking at longer term FLDs. The next interaction that we label is, of course, the D category interaction, and I should have labeled over here the B and C. The D category interaction, which takes us down into a trough of the next longer cycle, the 20-week cycle, which according to this analysis formed over here. The E category interaction was over here, where price bounced up out of the 20-week cycle trough. You can see that it significantly failed to achieve its target, which was a very bearish sign. It then turned down, and this was the F category interaction, where price crossed below the 80-day FLD. This was our G and H category interaction that formed over here as price moved down into the 40-week cycle trough. It has come back up again and has found resistance again at the level of the 80-day FLD. Could this be a double GH category interaction? Yes, it could. And if that is a double GH category interaction, then we would expect one more move down into this 40-week cycle trough. On the other hand, if we consider again this circle for the 40-week cycle, there is a good chance that the 40-week cycle trough has formed, and so we do need to watch how price behaves around the 20-day FLD here to see which way it is going to go. But let's take a step back for a moment, because it's always really important to consider the bigger picture. If this is indeed the 40-week cycle trough that has formed, or even if it is about to form within the next 30 days or so, the fact is that we have a bearish M shape behind us for the first 40-week cycle of this 18-month cycle that started at the beginning of October. The next 18-month cycle trough is over here, expected early next year, as I've mentioned in previous videos. And so we are going to expect to see another M shape. Now, our persistent optimism would like to see that as being a bullish M shape. However, the truth is that it is not likely to be a bullish M shape. If this analysis is correct, then the next M shape that will take us down into the 18-month cycle trough early next year will be more bearish than the one that we have just witnessed. Is there no hope for a more bullish market? Because all of the analyses that we've looked at so far today are indicating that we are going to expect a more bearish M shape into the 18-month cycle trough expected early next year. And so even though we are going to get a bit of a bounce out of this 40-week cycle trough, the fact is we're in for some bearishness. And in fact, if we take a look at the composite model line on this analysis, I think it paints a fairly clear picture. Although we are looking at a bounce out of the 40-week cycle trough, the general picture is for a downward move into early next year. Well, there is one glimmer of hope for those of you who would like to remain bullish, and that is contained in the analysis that I showed several weeks ago, which is the initial cyclic model analysis. I explained it in the market update video in which I presented this analysis. Basically, what Sentient Trader does is that it uses the initial spectral analysis performed on the data to identify what cycles are actually beating in the markets. And it fits those cycles into the nominal model structure as defined by Hurst. And the initial cyclic model has found much shorter cycles, as I discussed in that video. And you can see those cycles over here, the right-hand edge of the chart, about a 14-month cycle instead of an 18-month cycle. So the good news, if this analysis interests you, is that according to this analysis, the trough that formed in the middle of June was, in fact, the second 18-month cycle. But is that such good news? Because you must remember that we still have a 54-month cycle trough over here in March of 2020, and we have 1, 2, and then 3 18-month cycles that must elapse until the next 54-month cycle, which you can see, according to this analysis, is expected in the middle of next year. And the cycle shapes for those 18-month cycles go as follows. We first of all have a very bullish 18-month cycle, which we did. That was undoubtedly bullish. We then have a less bullish, perhaps even slightly bearish 18-month cycle, which indeed we did have. That was a bearish 18-month cycle, particularly with this final leg of the cycle bringing us down to a lower price. And so the third 18-month cycle is expected to be what? More bullish or less bullish than the central one? It is, of course, expected to be less bullish, or, let's face it, more bearish than the central of the 3 cycles. And so we are really looking at the same kind of a bearish picture unfolding over the next several months. Or perhaps I shouldn't say several months, unfolding over the next year or so. And so even this analysis, with the possibility that an 18-month cycle trough has formed over here in the middle of June, is nevertheless fairly bearish in the longer term. If we take a look at the composite model line, you can see that the bearishness is not very exaggerated, it's not very strong. That's because there isn't really enough information about the longer cycles to show us exactly how bearish this cycle will be, but the next 18-month cycle, as you can see over here, is certainly not a very bullish cycle. I do hope you found this market update useful and interesting. Keep a close eye on the markets. Let's see how they react to that 20-day cycle FLD. And if you have any questions, please put them in the comments below the video. I look forward to hearing from you.